Hello and welcome to Asking for a Trend. I'm Josh Lipton. In the next half hour, we're breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here's some of the trends we're going to be diving into. It's a mixed day for stocks on Wall Street as investors seem less optimistic about retail earnings. And Wall Street is also seeing a rotation away from big tech stocks. At the end of the session, the S&P and the Nasdaq ended the day down. Dow did finish higher. Are tariffs impacting coffee purveyors' bottom lines? We're taking a deep dive into what's brewing with many of the big chain coffee companies that Americans visit daily. And just 5 years ago, Apple hit a major milestone. At the time, a first for a public company, hitting a whopping $2 trillion market cap. We're taking a deep dive into the tech giant's ascent and its competitors who are hot on its heels. Well, coffee drinkers are swallowing higher prices, and it's about to get worse. Coffee prices spiked 14.5% in July from a year ago, according to BLS data, and that is before President Trump's 50% tariffs on imports from Brazil hit. Joining me now is Greg Francfort, Guggenheim Securities senior analyst and managing director of restaurants. Greg, it is great to see you. Start here, Greg. Explain how tariffs are going to potentially filter down, hit the coffee chains you cover, like Starbucks, like Dutch Bros.
Yeah, it's tariffs on Brazil are a challenge for the coffee market. Brazil is about 35% of U.S. coffee production, so it's a big deal. But the coffee that the restaurants, Starbucks, Dutch Bros buy, Arabica coffee, about 40 to 45% of that comes from Brazil. So it's a big deal. There are 6 or 7 other countries that represent about 40 to 45% of the market. And Starbucks buys from 28 countries. So there is a bit of a diversification there that can offset, but it's a big deal. They sell coffee, and a lot of it comes from Brazil. There's no really getting around that.
What are the levers those companies can pull then, Greg? Are they necessarily raising prices? If so, how much?
Yeah, so generally how it works is for a restaurant P&L, 25-30% of sales generally is what actually goes to the food or the coffee and the raw materials. Of that component for Starbucks, for Dutch Bros, about 10% of it's coffee. So if you can think about 3-4% of their business is coffee. However, those prices are basically doubled from where they were, 5 years ago. And so you can eat a little bit, but eating a doubling of the price is a big move.
Is one company, Greg, you cover in some sense better position to weather all this than the other? Is Starbucks better positioned than a Dutch Bros?
It probably impacts them both. Starbucks has more of a license model and a bit higher margins, because of that in that segment. However, they're both going to be exposed. I mean, as we look at it, Starbucks probably buys about $1 billion worth of coffee beans a year. And so a 10% move in that might be 3-ish% EPS. Dutch Bros probably buys a tenth of that. And maybe that's mid-single digits. So you maybe have a little bit more of a percentage EPS impact to Dutch Bros than you would have at Starbucks. But it would impact them both. And you would probably be seeing pricing coming through as an offset because they're not just necessarily going to eat that on the margins.
Do we have a good sense, Greg, if it wasn't for tariffs, what coffee prices would be doing?
Yeah, I mean, coffee prices were up a lot already before any of this came out. We've had challenging weather the last 2-3 years in Brazil, a little bit of a lack of fertilizer imports that have dragged on crop yields down there. And so prices had already gone from $1.50, $2 up to over $4 in earlier this year per pound. A big part of what was driving that was just Brazilian, weather and conditions on the ground from a crop perspective. That doesn't really necessarily go away. These companies do hedge 15 to 18 months out. They have some protection, but a lot of that was getting worked through, and the hedging had come down. Definitely at Starbucks, as we get some details from that in their Qs and their Ks. Greg,
I want to end here, give you a sense of your ratings on these guys. So you have a neutral on Starbucks. Why you say on the sidelines there, Greg?
Look, I think maybe Bros is a big part of it. You do have some of these competitors that are popping up and are you probably have 5,000 coffee units in the next 10 chains after Starbucks and Dunkin', and they're growing really fast. And so you have a lot of competition that's coming into the category. And we like what Bros is offering from a consumer value proposition and kind of excitement in the space, and that's reflected in our ratings.
Greg, great to have you on the show today. Thanks so much for your time.
Thank you.
Stick around. Much more Ask for a Trend still to come. Toll Brothers reporting third quarter earnings moments ago. Shares falling here. Let's get you those results. So Q3 EPS $3.73 versus an expectation of $3.60. Q3 revenue, it looks like, comes in at $2.88 billion. Consensus was $2.86 billion, so beat there. Let's see, Q3 adjusted home sales gross margins, there it is, 27.5% versus consensus was at 27.3%. Looking ahead, they're looking for Q4 deliveries 3,350 versus an estimate of 3,523. They're looking for Q4 adjusted home sales gross margins 27%. The estimate was 27.2%. It looks like they still see full year adjusted home sales gross margins of 27.3%. So down about 2%, at least initially here in the after hours. Remember that stock was up about 5% year to date. Housing data we also got this morning, just more broadly. July housing starts, they came in stronger than expected, remember, though that was driven, economists mostly pull out by multifamily drove that. Permits did come in a bit lighter. Again, initially now backing off, stocks down about 0.5%. We'll see what they say on the call. Well, NASDAQ drops over 1% in today's trade as Palantir and AMD drag down tech. Here with the trading day takeaways, we have Yahoo Finance's Jared Blickery. Jared.
Thank you, Josh. We got to talk about tech taking a tumble. That is to the downside. Haven't seen a worse day for the NASDAQ in a few weeks. You'd have to go back to the first trading day of the month, which was August 1st. So let's take a look at some of the market action today, and then maybe we can get an idea of where we're going with this. So here was the intraday price action. Just want to show you, though, in the big picture, we're still up 10% year to date and just a blip off of those highs right there. I thought it was really interesting to see the sector breakdown. Tech was the only underperformer. That means it was doing worse than the S&P 500, which is the GSPC ticker right there. But you don't see a lot of red. In fact, you see a lot of green right here. Real estate did well, and we're going to get into some of the winners in a minute. But now I want to show you my leaders board. This kind of shows me, I set this up to show me where the hot money might be flowing, and the hot money was flowing out of a lot of sectors today, out of a lot of industries. Cannabis, which has been doing well recently, took a dive. ARK Innovation Fund, IPO, Bitcoin, we'll get to that in a second, software, Korean stocks, solar, which has also been doing well recently, Mag 7, chip stocks, the list goes on. And so this just tells me that it's kind of a normal rotation in the market. I'm not seeing any red warning flags, not any orange ones, maybe a couple yellow ones, but that's the extent of it.
So tech was getting attention. What about outside tech?
Yeah, let's take a look because I'm going to talk about some Dow theory here. Transports were taken off today. So the Dow actually closed just barely in the green. And when we say the Dow, that's the Dow Industrials. And we can see that. This is the Dow leaderboard here. The mega caps did bad, but we had a lot more green over here. Now I'm going to show you the transports. And a lot of green here. A lot of these are value stocks. And what we saw today was value was doing well. And it wasn't just that. If we go back to our sector, what did well? Real estate, 1.78% to the upside. That was the best day in a while. Real estate is sensitive to interest rates, longer term ones. We saw those drop. So I think traders see the action. All right, everybody's piling out of tech today. What can we buy? Rates are down. Let's buy some real estate. Staples, good old Staples, up 1% today. Utilities, healthcare has been perking up recently. So we are seeing a little bit of a safety trade, but not the dire circumstance that I've seen, let's just say, across X today, the former Twitter.
Yeah, how about crypto? Should we do a Bitcoin check?
Yeah, let's do that as well. And let me get to my header here, because I was talking yesterday about Bitcoin as kind of a leader and even MicroStrategy leading Bitcoin itself. So let's take a look at that trade right now. And first, I'm going to go to our comparisons here. The first chart I led with yesterday was Bitcoin versus the NASDAQ 100. This is a year to date, and in purple here, we were sitting on some higher gains was Bitcoin, and that was down yesterday. And what I was saying was the NASDAQ really hasn't caught down to that, but we saw some more downside action today. So that got fulfilled. And then the other thing I was looking at was Bitcoin versus MicroStrategy, and this is a little bit more concerning because MicroStrategy, we're seeing a big divergence. We saw, for instance, this is that year-to-date time frame here. We saw a higher high in MicroStrategy, higher in Bitcoin, but just kind of melting off there. And now that we saw MicroStrategy with year-to-date returns below Bitcoin. For me, that's an ominous warning sign. It's not a red one, but it's yellow, maybe migrating into orange. I'm going to finish here just by showing the crypto board so we can see our heat map and kind of get a picture of everything that's going on in crypto. Ethereum down 4%, but look at the price, still above 4,000 there, and that's kind of a big key level. Put the year-to-date on, and so you can see still a solid uptrend for Ethereum. So right now, we're still relatively close to these record highs or recent near record highs that we've had in a lot of these coins.
You know, you haven't mentioned in a few days, which is unlike you, the dollar.
Oh, how could I forget? Well, I'm glad you mentioned that. It's interesting because the dollar was up today, so we saw money moving into the US dollar. Let me get a chart of that. And here we go. US dollar index was up. This is a year-to-date, and you can see it doesn't look like it was up today, but I swear it was because of the down movement there is so big by comparison. But what was going down today is a 10-year T-note yield down 4 basis points. That's why I was saying real estate was doing well. And the 30-year yield was down as well. So you put that together, when you have yields going down, that means bonds are going up. So people were buying dollars to buy bonds. Maybe there's a little bit of a safety trade there too. So we saw a little bit of safety trade in action here. We also saw some healthy rotation. All in all, not a concerning picture, but we do want to keep in mind that we're heading into that high volatility season in September, October.
All right, thank you, Jared.
You bet.
Appreciate it, my friend. Stick around. We're taking a deeper dive into a historic milestone anniversary for Apple. Joining me now is Yahoo Finance tech editor, Dan Howard. Dan.
It's been 5 years since Apple's market cap hit the $2 trillion mark, making it the first to do so and the most valuable publicly traded company in the world at the time. Since then, others have surpassed the milestone, including Amazon, Google, Microsoft, and of course, NVIDIA. Apple's market cap now sits at roughly $3.4 trillion, though it's no longer the most valuable company. Microsoft and NVIDIA broke through the $4 trillion mark back in July. Apple initially crossed the $2 trillion point in 2020 on the strength of its iPhone sales. The handset, which launched in 2007 under then CEO Steve Jobs, was transformational for the company, putting it at the forefront of the still nascent smartphone industry, and it never looked back. Apple's biggest strength continues to be its massive install base. In January 2025, the company said it had more than 2.3 billion active Apple devices. Still, the company has had its share of difficulty. The Justice Department filed an antitrust lawsuit against Apple's business practices. Its much-hyped Vision Pro headset has also struggled to gain traction, and the company's AI efforts have also left Wall Street wanting for more. But Apple has a history of slow rolling new technologies before putting its own spin on it and making it a hit. Time will tell what that next hit will be.
So now, Dan, looking ahead, we would expect coming up shortly, September, Tim Cook takes the stage, unveils those new iPhones. How excited should we be?
I think people are going to be excited about the new phones. Look, you know, the Apple AI stuff, as much as Wall Street kind of is freaking about it, the reality is, you know, it's going to be a process that rolls out across multiple generations, right? And that's what we're seeing with Google, right? They're doing the same thing. Samsung has continued to roll out AI across its devices over time. The thing that continues to sell, the hardware. It's what those physical changes are, right? Samsung is actually seeing good sales of its new foldable phone that's super slim. That's a big part of the sales process. So with this, according to Bloomberg, we're supposed to get a thinner iPhone 17. There's been reports of an iPhone 17 Air, or who knows what it's going to be called. I don't really like the Air name in there. But that could sell well because it's a different piece of hardware.
Form factor change.
Form factor. Now, that also leaves us for next year. Right? There's reports that we're supposed to get a foldable iPhone. Now, I think, you know, foldables have been a hard sell so far. They're expensive, right? Samsung's foldable is $19.99. That's $2,000 for a phone. That's a lot. Apple, it may have the benefit of being considered a more premium brand in consumers' eyes here in the US. If it does roll out a foldable, that will be what gets it selling, not AI, at least at this point. Eventually, we'll get to a point where if you don't have AI in your phone, because it's built up over time on, say, an Android device, a Samsung device, if they've built up over time and have all these features, and Apple doesn't, over the long run, you'll start to think, oh, well, why am I on the iPhone anymore? But Apple's going to get there. It's continuing to roll out It's not going to be the end all be all. One big update comes out and everyone's going to start saying, well, look, Apple's, that's it. I got to go on to Samsung or Google. It's going to be, oh, well, they have that. Okay. Look, people were buying iPhones. They didn't have copy and paste. I mean, you got to be kidding me, right? Now everyone's freaking about AI. It's like, all right, yes, it will be important for these devices. Right. It's not going to be a one product drop and everyone starts ditching it. It's going to be, if in 5 years or if in 4 years Apple doesn't have enough AI on its phones, then it's a problem. But as of right now, it's not that much of a problem. And they are adding elements, just not as much as Wall Street would want.
It's interesting you bring up that point. Investors are excited about AI. Are consumers as excited about AI? Is there the killer AI app yet?
Yeah, ChatGPT. I think that's it, right? Yeah. Like at this point, that's still the main go-to, and Apple has that.
I guess let me put it differently. Still. Is there the app that gets people to ditch the iPhone?
Not yet, no.
Right.
I don't think that's going to happen. Look, ChatGPT is available as an app. You can get Google's Gemini as an app.
Yeah,
so
what's interesting, I use ChatGPT, but I don't use it on my iPhone as much. I don't find myself doing that.
I never do that. Whenever I'm on my phone, I just usually go into, I have Chrome on my iPhone, and I just go right to whatever, the default is Google. So I still Google stuff on the go. If I'm on my computer, then I'm going to be using, ChatGPT or Gemini or something like that. I do use Microsoft's Copilot. So, I'm in all the worlds, but, on the device, it's still just whatever the basic search is. But I don't think, at this point, there is that killer app. I think, like I said, it's going to be a slow kind of burn until we get to the point where it actually matters. It's not like they're dropping the app.